if I see the reason for this and it's something that's not going to evaporate tomorrow, I have been steering away from PGMs for years because for like 15 years, people keep telling me, oh, platinum's cheaper than gold. It's got to go up.
Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are back with Lobo Tiggre of the Independent Speculator, fan favorite. Lobo, thank you for coming back on the show.
Always glad to be in it to win it with you, Steve.
Yes, sir. Pleasure is all on this side of the table. Let's start out like we always do. And what is your macro view of the world economy and financial markets today?
Well, as I always do, I must disclaim I'm a due diligence guy. I don't charge for my macro letter, which tells you maybe what I think it's worth. I'm paid to kick rocks and tell you what I think about the stocks. But in today's world where there's so much bias and not just on professional economists, but of the commentators that, they all have a side, it seems. So I think the independent speculator has to think for his or herself, analyze for his or herself, and make his or her own calls, because everybody's got something to sell you and you can't trust the sources. You should even question me. Anyway, the answer is Trump shock is still ongoing. I think Wall Street is maybe not quite as happy, giddy, joy as they were before, but I think they're overly optimistic that there's going to be a deal with China, or that things are going to work out. The worst is behind us on the trade war. And okay, if the worst behind us is the shock and awe announcements of April 2nd, well, then maybe the worst shock and awe announcements are behind us. But the reality of the tariffs and the impact on the actual economy, that's still largely in front of us. Some of it is starting to hit home. We're starting to see it in some of the hard data. But even if we get, I'm not sure what a best possible outcome would be of all of this. But if Trump's going to achieve any of his objectives, that outcome isn't we go back to the way things were before. So there will be higher tariffs in some kind of form. There will be changes in the economy, and those have to work through the system. I think that pig is just starting to go into the python, and it's naive would be a nice word to think that, oh, the worst is behind us. So that's my context. On top of that, we've still got shooting wars. Sorry, the war in Ukraine did not end in 24 hours or even 6 months. The things in Gaza may or may not get worse. I mean, it just, that hasn't ended. And now we've got threats with Iran saying we're not going to stop enriching. I mean, that could get very scary. So there's lots going on in the broader world. Reasons to be, never mind bullish or speculating on, but to own safe haven assets like gold and silver. This is insurance, not a speculation in my view. And I think the audience is on board with that. So the upshot of all this is, I think, inflationary. Near term, there could be some deflationary shocks. The energy side seems to be helping. Economic fear can have a deflationary impact. But, we're all but getting rid of the debts of the United States. We have gotten rid of the debt brake in Germany. We're going to spend trillions and trillions around the world remilitarizing. And the money helicopters never left the sky. And we're talking, multi-trillion-dollar deficits as far as the eye can see. But don't worry, trust us. 10 years from now, we'll cut the budget. So scary world, bullish for safe haven assets, inflationary outlook, bullish for anything real, including monetary metals, but also commodities as a class, and in particular, those facing structural supply constraints. Say that 10 times real fast. And my favorites there are uranium and copper. Where do you want to go from there?
Okay. All right. So Trump shock, I like the way you put that, is the worst behind us. Maybe, maybe not, but the reality is, as you see it, the pig is just starting to enter the python, and we haven't even really seen the impacts of these tariffs yet. We're still working out the deals. There's probably at least a month or two delay between things getting shipped from China to the US. So I'm starting to see that into my orders on Amazon, out of stock, unknown when it is available, right? You see continued inflation and everyone can see the writing on the wall with that, with all the promises of reducing the deficit, and really it was the exact opposite. He increased the deficit, so increased spending, which leads you to believe that you're bullish on real things, real assets, commodities, and the top two in your mind right now are uranium and copper.
Yeah. By the way, it would apply to real estate and other real things. It's just that as a market participant, those are not my specialties.
Okay, all right. So anything real, even real estate, but as far as something that you can click on a mouse on the stock market, you like uranium and copper the
Well,
most.
as a resource focused guy, I mean, I do oil and gas, metals and mining, natural resources, extraction industries, cows and beans, not so much.
Okay, all righty. Let's do gold, silver, and precious metals first. Zachary and Derek pretty much have the same question. They're basically asking, do you think that there's a better time to get gold and silver? In other words, do you think that there's going to be a correction for a better entry point, or is now as good a time as any?
My answer on this has modulated over the last month or two. When gold kissed 3,500 and retreated, I was thinking the odds favored us getting significantly lower entry points. But the strength that gold has showed after that, I mean, it's really quite striking. And we get these, CPI prints or PCE prints or labor prints and things that a year ago would have really rocked the gold market one way or the other, or more like 2 years ago. And now they seem to have a marginal impact. Yes, if there's a big surprise, a beat or a miss on some key economic data, we do see gold respond that day, gold and silver. But the reality is we're still holding plus or minus 3,300, 3,400. And I think this underscores something. It's not just me saying this. A lot of people are saying this. The central bank buying, the reasons why China or places like that are going to buy gold, or not just China and Russia, but other places, ever since the so-called weaponization of the dollar, kicking Russia out of the SWIFT system, and that, revealing the vulnerability of trusting the United States with your financial livelihood, even if you're an ally. I mean, wait, sorry, but before Trump 2.0, maybe allies might have had, reason to think that, they're relatively safe. But with Trump not ruling out military force for taking over, number in Greenland, but Canada, what ally can possibly feel 100% safe leaving their financial lifeblood flowing through Washington and New York? Right. So that international diversification out of the dollar, the declining reserve status of the dollar is a multi-decade trend. No, it's not going away tomorrow. The dollar's still there. That's not what I'm saying. I'm saying that trend was there for a long time, and it's just accelerated. And clearly we can see in the gold dollar exchange rate that this bid has pushed diversification into this space of the monetary metals, particularly gold, and that's not going away. And it doesn't care, right? And China doesn't care what the latest CPI report in the United States is. That's not where they're buying the gold. So I'm actually, the answer to the question is I'm now seeing much less downside. If I owned no gold right now and I had missed the boat before, would I buy today? Yeah, I actually would. Like I'd go this week and buy the next dip, even at these levels. Now, my cost basis is something like $700. So it's a little bit hard for me to go out and start buying it at 3,400. But the answer to the question is yeah, I see a lot more upside than downside, particularly in gold. Silver is a bit different. It does have its industrial side. We do see it move with copper. Right now, as people as silver bulls are all like saying, woohoo, this is it, 37, it's going straight to 50 and beyond. Maybe, I'm not saying it won't. But notice that platinum, palladium, even rhodium, who the hell even knows what rhodium looks like, right? Yeah, it's another silvery metal. So there's a bunch of silvery metals that are all going up right now. It's not just silver. So this isn't just, this is silver finally catching up with gold. It is these other expensive silvery metals kind of moving as a group right now. This suggests to me that it's more the industrial side. There's something going on there yet. It's just a couple of days old, so I don't really know, and I don't think anybody does. And I wouldn't believe anybody who did say they knew. But in hindsight, we may find out that there's some squeeze, something going on the physical side that's moving these industrial metals right now. Now, please, silver bulls, put away the rotten tomatoes. This is not a bear case for silver. Actually, the industrial side, when you're already bullish on monetary metals anyway, is a tailwind. If it goes away, okay, that removes support from silver, but it doesn't make silver, go to zero or something. And if it's there, gold doesn't enjoy that. So there's upside in silver that is not really present in gold right now. And that's really interesting to me. Long story short, though, is I think with the potential for realization amongst the mainstream that Trump shock is not over or not all behind us, we could see these industrial metals all take a whack, including copper. And that might create yet another buying opportunity in silver. If so, that would be one I would be happy to buy. But you never know. Silver, when it gets the bit in its teeth and it just goes, it is possible, audience, that the next stop could be 50 and then beyond. I'm not trying to say no. I'm just not willing to bet the farm on it.
Okay, so basically, if you are just now finding out about gold and you have no gold, you're like, hey, at least get something on the table, right? So that's basically your advice there. With silver and the way you put it, the other silver metals, that's interesting, is I was running through them in my head as you were talking about that, and I'm like, yeah, you're right. The only monetary one in there is silver. The rest, platinum, palladium, and these other ones that have had a spike up there, they could get hit by a coming recession, and since they're so far on the industrial side.
Fun fact, Steve, I have been corrected. I used to say monetary metals are just gold and silver, nothing else. Sorry, platinum bulls, it's never circulated as money. And somebody in the audience on one of these interviews corrected me, and no, actually, there was a platinum ruble for like 2 years or something back in the 1800s. And then, supply surged, prices crashed, stuff happens. But basically, yes, aside from an oddball experiment, it's gold is money, silver makes change. Copper back in the day, because it was convenient for small transactions. But nowadays, honestly, blockchain solves that problem. I see the marriage of blockchain and real money as a good thing. I believe it or not, I do think that we're going to see gold used as money in the future. I just am skeptical that we'll use physical silver and or copper to make change. There's no need for that anymore.
Yeah, good point. Good point, especially with
technology. Well, maybe in a Mad Max world, but we kind of hope that won't happen.
Yeah, exactly. Hopefully we never have to live to see that, or our kids either. Okay, so let's move on to EJ wants to know, he says, how much of the increase in gold price corresponds to the decrease in the value of the dollar, and how much is due to an increase in demand? Is there a distinction, hand in hand? What are your thoughts?
Depends on what you mean by value. If you pull back, then my favorite chart in all of this space is the long-term chart of the purchasing power of the dollar since Tricky Dick Nixon slammed the gold window in August of 1971, and the gold dollar exchange rate, aka the price of gold. It's a giant X, somewhat curved. Time delays, long and variable lags, but it's a giant X. And this isn't just a chart. I mean, it is the entire relevant chart, because the dollar was defined as a certain amount of gold before that. And okay, FDR devalued the dollar back in the 30s, 50% roughly, but it was defined as a certain amount before, defined as 50% left afterwards, but it's still defined. So, the price of gold was set. It was, or rather, the price of the dollar was defined in terms of gold. So that whole time period before that is a completely different financial regime. So from 1971 today is the entire data set. That's the whole thing, the whole enchilada of gold actually being free to fluctuate globally, because the other countries got rid of it before, Bretton Woods. So this giant X, 1971 to present, is really in many ways all you need to know. I mean, that is proof in the pudding to me. Dollar value down, gold dollar exchange rate up, no question. In some ways, I would say that the gold dollar exchange rate is the better measure of real inflation, meaning monetary inflation, meaning inflation of the money supply. And by the way, if you do a correlation between gold and M2, US M2, it's above 0.9. I mean, it's not quite 1-to-1 because there's wiggling in gold, but it is obvious. This is incontrovertible in my view. You overlay those charts, and they're like, you know, so no question there. But I said it depends on what you mean by value. If you look at what I call the wrong trousers, that's the DXY or dollar on Forex. There's huge volatility, and people say, "Oh, the dollar's up, the dollar's down." They don't mean I can buy more or less with my dollars, or that my dollars are worth more or less in real terms. They mean the dollar is up more against the euro and a basket of other currencies, or such as in the DXY or other dollar indices.
There's the DXY. Looks
Right. So
volatile, but it's
I call
compared
this the
against
wrong trousers because if you see a strong dollar on this doesn't mean you can go to the store and buy more stuff with your dollar. Well, maybe if you go to a European store that day. But the point is that strength on Forex is not greater value. It's just relative strength to those other currencies. So if those other currencies happen to be winning the race to the bottom now, that makes the dollar look stronger. But in the US, when you go to the store, it doesn't make you buy anymore. So this is the wrong measure, but it is the measure. When forward-looking markets, it's actually rare for gold and the DXY to wiggle at the same time because markets are forward-looking, which is why real rates have been important in the past because they supposedly tell us where the dollar will be in the future. But all of this stuff has been broken since COVID, and which is why I like that other giant X chart. Like long term, it doesn't take. In the near term, it's very difficult. Since the DXY is the wrong trousers, I see it as largely noise.
Yeah.
Also, by the way, if gold is an inflation hedge, if you do a short-term correlation, gold and CPI don't correlate hardly at all.
True. Yeah.
And that's what people say. Well, if what you're saying is true, Lobo, if gold is the best indication of real inflation, why doesn't it correlate with CPI? Well, real inflation is inflation of the money supply, which has consequences in the cost of goods. CPI is a different animal. But besides that, gold tends to front run. So like we saw gold take off in 2020 after the COVID lockdowns. And what happened to CPI? Like nothing. And people saying, this is where the bear case for gold was. Oh, gold's taken off and CPI hasn't. So gold's running ahead of itself. It's not real. It has nothing to inflate. And then guess what? So, flash forward a year or two, inflation goes up to 9%. And this is classic. The gold market are people who are smart enough to read the writing on the wall. Never mind what the politicians say, read the writing on the wall. Holy cow, look at all this money printing. Inflation is coming. That put a bid under gold before the inflation got there. So therefore, the correlation in real time is low, but if you offset them by time, it's higher. Now, here's an interesting thing, Steve. If what I just said is right, if that holds true, what does gold go screaming up to 3,500 tell us about inflation in the future? It's like gold predicted the big, beautiful bill or something like that.
Yeah. Yeah.
We'll see what happens.
Yeah, I've noticed that too since I started studying this market. It's like gold figures it out about 6 months before everyone else. You know what I mean? The commodity traders that trade this are probably some of the brightest people on the planet, and they figure it out before everyone else, and then everyone sees the inflation on the
Let me put it this way. The audience might like this. People talk about the bond vigilantes disciplining the politicians or even the Fed. Maybe it's the gold vigilantes that we ought to be paying more attention to.
That's a really interesting point. Yeah. Yeah. Okay. Let's get on to your first highest conviction bet in the commodity space, copper. Are we still waiting on recession to hit to do its worst before we enter the copper space? What are your macro thoughts on copper?
Yeah, personally, I am. And it feels like I've missed the boat a bit. Certainly earlier this year, I did. Then it came back some. Copper's back up again. Let's put it this way. If I knew that I had the intestinal fortitude to deal with a 30, 40, 50% haircut after buying and stick with my trade and see it through, I could see buying high quality copper plays now and just screw it. Who knows where the bottom is? I can't time the market. Nobody can reliably. Yeah, I'm so confident of where copper is going in the coming years and decades, really, that if I wasn't a newsletter with 20,000 people looking over, sorry, newsletter writer with 20,000 people looking over my shoulder saying, what have you done for me lately? I could just see, just saying, forget it. I don't know where the bottom is. I don't know what's going to happen next. I'm just going to buy great copper stocks now, just stick them in the drawer and forget about them for years, and I'll make lots of money. I could imagine doing that. But as a public figure who people follow, if I did that, Steve, and copper dropped, back under $4 with gusto in the months ahead, as that Trump shock, as that pig goes into the python, mm-hmm. If that Trump shock sends copper significantly lower, those stocks are going to do it with leverage. And I will have people screaming bloody murder, unsubscribe me, you bastard, you thief, you cheater, whatever, all that stuff. So no, I'm not going there. I need to be sure that the trouble is clearly, or the risk of downside is behind us, or that it happens and I have that buying opportunity. Now, personally, I'm not entirely out of copper, but I am betting, and I've been waiting. I've kept my powder dry. Come the day, copper will absolutely be top of my shopping list. But we're not there yet. If I wasn't concerned about more Trump shock, shaking things up, I would probably be a buyer today. But I am concerned, so I'm waiting. And you know what? If I'm wrong, that multi-decade scenario is still there. I'll still make money, Steve. Yeah. I don't know where the bottom is. So, I'm trying to buy low. I'm trying not to set people up for near-term pain. But I'm very bullish going forward, and I'm just waiting for the right time. And that'll either be, I'll buy at higher prices than today, but still make money, or I'll have the chance to buy at lower prices and make even more money. Win-win for me.
Yeah. This is this is going to be at least a decade-long cycle. And whether you get it now or 6 months from now, there's still going to be the massive bull run.
That's the way I see it.
Okay. That is copper. And we touched on this a minute ago. PGMs, platinum and palladium. So we've seen a spike in platinum and palladium recently. I'll pull up the charts here and we can go on that. What are your thoughts on the PGMs?
Well, it is really interesting. I honestly don't know what's happening there. As far as I know, South Africa hasn't imploded yet. And as far as I know, the Russians are as good as ever at slipping around sanctions and restrictions and things. So it's not like suddenly Russian supplies gone offline, or suddenly the power went down in South Africa and never came back on again. So I honestly do not know what's happening right here, audience. So I won't try to sell you a bill of goods there. But it is interesting to me that it's not just platinum. It's all three of those, platinum, palladium, and rhodium. These are all automotive industrial metals, and silver, which is also an industrial metal. So, is there something in the supply chain that affects all three? Not really. Silver doesn't come from the same mines as platinum, palladium. Is there something in demand side that affects all four? Silver, solar panels. There is some silver in cars. Actually, in some designs, I understand there's quite a bit, but it's not like the battery metals. So let's not beat this to death. I think it's really interesting that we're seeing silvery industrial metals move up in conjunction. I don't know why. I'm hopeful that that's a tailwind that persists, but if it is a temporary squeeze, and these things do happen sometimes, maybe some big trader out there got caught short and they're eating their shorts right now. And as soon as that position is cleaned up, like, some big, I don't want to name a name because I don't want to pretend I know something I don't, but, think about big metals traders, maybe some start with a T or something like that. And so this whole thing could go to reverse tomorrow. But if it's something sticky, if it's something structural, we later find out what it is. I think that's extremely bullish. This adds a tailwind to silver and these other, the platinum group metals as well, that wasn't there before. So since I don't know, I'm not willing to take action yet, Steve. I haven't changed my marching orders, but I'm watching this very closely. And I'm telling you, your audience will be first to hear this. This is highly material. If this sticks, if I see the reason for this and it's something that's not going to evaporate tomorrow, I have been steering away from PGMs for years because for like 15 years, people keep telling me, oh, platinum's cheaper than gold. It's got to go up. Well, guess what? It didn't. Well, if that's changed, if something has changed in that market that's affecting these metals, then I see an enormous amount of upside. It could even overtake copper this year. But I need to see it first yet. I'm not just going to bet on the price line wiggles. I'm a fundamentalist. I want to know what's happening in the market. If whatever's happening is something I can believe in, then yes, it will change my marching orders. It'll rearrange my shopping list, and readers of, well, even my free readers of my macro letter will know when I make that change. Of course, paying clients will get to know which stocks I pick.
Okay. Yeah, I remember I've been asking Rick about this one for years, and he's basically, since the Ukraine war, said that, Russia is has a pile of these metals, and they've been selling them to pay for the war. And I got all fingers and toes crossed that they've run out, and this is finally the squeeze that we've been waiting on, because we got into this thing.
Steve, that's actually a really interesting point. I've heard Rick say that too, but who knew when that pile would end, right? So if that's it, if that's really it, that's interesting, because that's not the sort of thing that even the Russians, they can't just snap their fingers and suddenly come up with more, right? You've got to ramp up your mining and all that, and get around, the new sanctions and everything. It'll be interesting. So if that's true, that could become investable. On the other paw, if that's it, if it's Russia and there is a deal on the Ukraine war, well, then the sanctions could go away and the whole thing could unravel. So caveat emptor, right?
Yep. I was talking with David Morgan as well, and as near as he can tell, platinum and palladium all-in sustaining costs across the planet is around $1,200 an ounce. He said, so essentially when you're buying this stuff at $900 an ounce, you're turning yourself into a platinum miner. And so that was kind of a bullish argument. But, I've been in this thing basically just buying every time it hits $900, but I've been in it for a couple of years. And so, that's essentially a loss. I mean, now it's not that it's gone up to 1,200, but I'm probably break even when you account for inflation. So
well, and there's opportunity cost there too, Steve. I mean, there's opportunity cost there as well. So, true. I mean, maybe now platinum finally is going to make platinum bulls rich, and yay, woohoo, that's fine. But I mean, I kid you not, it's been like 15 years that every year I've had people telling me, "Oh, Lobo, you're missing the boat on platinum. It's rarer than gold. It shouldn't be cheaper than gold. It's got to go up." Well, our friend Rick Rule likes to say, "Never confuse the inevitable with the imminent." So maybe it was inevitable that platinum would have to break out. Maybe that inevitability is happening now. But, for 15 years, you could have made a lot of money. Never mind Bitcoin and NVIDIA, but even in our own space, there were other cycles that you could have made a lot of money that you missed out on if you were all in on platinum, because it's got to go up.
Yeah. Or even just a 4% treasury, you would have made more on that. Okay, let's move on to uranium, your other high conviction bet. So we had a really nice sell-off in uranium. I'll pull up the chart here, and all the way from 108 or whatever.
A funny definition of the word "nice," but okay.
Okay. Well, it's a nice re-entry point. After having an easy double, then we found ourselves in a really nice entry point again. And so you recently stated that you're starting to buy back into the market. Now that you're back in, what are some of your sell triggers? What are you going to be looking for?
Well, I was never completely out.
Okay.
And this relates to the answer. I don't know how, I keep saying, I don't know how to time markets. I'm hesitant to buy or sell. I'm hesitant to buy when it looks like there's more downside ahead. And I'm hesitant to sell when it looks like there's more upside immediately ahead. But that doesn't mean I know where the top or the bottom is. So I didn't, I infamously was all alone on the Group W bench there at the 2024 Vancouver Resource Conference on that uranium panel, and everybody was cheering, yeah, $100 uranium, and I was saying, a correction is likely here. I didn't know that would be the top. I was just saying it was likely, right? So here we go. We got a big correction. So on your chart that you're showing the screen, right there, that red line bottom, this one I pretty much bottom ticked in my newsletter. I said, look, this is starting to get cheap. Look, it's starting to go sideways. This is starting to look like a buying opportunity. And then when it turned up, we're back in. So, is it off to the next, new all-time high or something? I don't know. I'm not going to be able to time that. I didn't know that this was the bottom. It could have been another shoulder on the way down. It has worked out. So the answer to the question is, I took a lot of profits on that spike that you've got on your screen here, but it wasn't because I knew that 106 was going to be the top,
Yeah.
or that January 2024 was going to be top. It's just, I had a bunch of money, right? So you just take profits. Doug Casey used to have the Casey free ride, sell half on the first double. My version of that, I call it the upside maximizer. I put a trailing stop on it. And when as long as it's on a tear, I let it go. And then when it rolls over, that's when I take my profits. So that's what I did. I didn't have to time the market. I just took my money off the table when prices turned on me. So I would anticipate doing the same. This time around, if this is the next big leg up, then I'll let her rip. I'll let her ride as long as it keeps going. And then when it rolls over, then I will take profits until at some point, I actually can see the uranium market becoming something I would be completely out of. Like, I can't imagine ever not owning any gold or silver. I mean, that's savings. I'm never going to liquidate all my bullion unless I have a financial disaster and I need it, need to dip into that insurance. But there's a circumstance or a set of circumstances where I could actually see just saying, you know what? High prices have cured high prices. There's so much uranium mining going on now. And maybe the thorium reactors are finally coming off for the theory and into practice, right? The Chinese have their first demonstrator up and running. At some point, uranium is not rare. And I think there will be ample supply. And it's not like it will go away. Somebody will make money in the uranium space, but it won't be the kind of speculative space where I see, easy gains. And so I will rotate into another sector. At that point, it won't be about, prices rolling over and taking my profits. It'll be a fundamental call. I'll be looking at the market and saying, look, we got a ton of supply here, right? And the new reactors aren't even using uranium anymore. It's changed. I don't know exactly how this will play out, but I will say that I would absolutely expect there to be a day where I'm no longer in uranium stocks at all.
Okay. Yeah.
Not tomorrow,
no.
not next year, not for a while, but
No,
I do think it'll come.
there's the pre Fukushima event right there that just wiped it out. If you see something like that coming, or and talking with Justin Hune as well, there's at least according to him, and I agree, is that there's going to be some point where some utility doesn't get their uranium. We can't continue this deficit forever, and he models this stuff out way into the future, and he's like, there is a supply crunch coming, but these utilities have never faced it, so they don't know what that looks like. Someone's going to not get their uranium. I got to believe at that point that is your final sell point. If you're in it all the way to the end, that's probably your.
No, that would create a price. If utilities can't get their uranium, that's extremely bullish for price. There'll be a scramble. There'll be a covering situation, and the price will go absolutely nuts. Obviously I wouldn't buy at that time. I don't chase it while it's going vertical like that. But that's where the upside maximizer comes in, because who knows where it goes. And by the way, this is a free report on our website, if you don't mind my saying so, Steve.
Not at all. I'll put a link down below, and then they can go straight to it. It's a wonderful report.
Free report. Just put that stop on there and let her rip. And then when the market turns, whenever that spike turns, there's your signal. You can just take the profits literally, or you can take more than your profits and leave just your initial investment on. Just why not? Or you can take the whole thing, sell everything. Taking profits doesn't necessarily mean closing the position. Those are not the same thing, though they can be. They overlap. Like, all volcanoes are mountains, but not all mountains are volcanoes, right? So what I'm saying is, I wouldn't need to know when that spike, like if that happens, right? If uranium goes just nuts because suddenly utilities can't find it and they'll pay whatever they have to pay, I don't know how long that will go or how high would that go. Nobody knows that. So this is where something that's not quite algorithmic, but mathematical, like the upside maximizer, helps. I don't have to make that call. The math will do it for me, if that makes sense. And it's completely different from, 10 years from now or 15 years from now, if thorium or fusion finally comes out and makes a difference, changing the whole marketplace, that's a different question.
Okay. Okay. Yeah, that's a really good point. That wouldn't immediately be your sell point. That would be the set your stop loss or your trailing stop. And okay, yeah, I'll put a link to that upside maximizer down below. Highly recommend it, and that would be an excellent place to put it. Okay, let's do oil and gas. So Doman wants to know, what are Lobo's thoughts on crude oil currently? Can we expect more downside, and where do you think we'll land by the end of 2025? So crystal ball question.
How crude, how crude. Yeah, I mean, it's really interesting that with, all the signs of economic trouble around the world, sometimes, side note, sometimes people criticize me for overly focusing on the US and the Fed and Trump. It's a global economy. I get that. It's just that commodities prices are quoted in dollars. And so what happens with the dollar, rightly or wrongly, it has a huge impact on our speculations and our stocks in particular. So it's not that I'm unaware that there's a world out there, but in the oil space, it's really striking that, you've got China struggling like bejesus without, kudos to them for not wanting to reinflate a new real estate bubble. Short of that, they've been trying to stimulate for years, and they're looking at, consumer price deflation over there. And you've got central banks around the world cutting, ECB cutting. For Japan, they're in a rock and a hard place because they still have high inflation and negative GDP. So, what are you going to do? Your toolbox is empty on that one. What I'm saying, though, is that globally, there's plenty of signs of economic weakness. Let's set American exceptionalism aside for the moment. In that environment, OPEC is increasing output. They're not just increasing, like they quadruple the increase, right? They're massively increasing the increase in output. Like, why would they do that? Now, maybe they want to try to go for market share, right? They're trying to put the US shale producers out of business. Or maybe there's a back channel deal here where this is Trump applying pressure on Russia. If our pals in the Middle East can send oil down, well, even where it's at now, but if they can send it down to 50, which is the stated target, that puts Russia in a world of hurt, and it makes its war effort that much harder to maintain. So, maybe that's what's, I'm not saying I know this. My secret sources in the CIA have told me, I don't know. I'm just a market observer. I'm just a due diligence guy. I'm just saying it's really interesting to see in this world where you would think that they would continue the supply constraints to bolster prices. Instead of doing that, they've opened the floodgates. Which brings us to the answer to the question: is in this world, whatever the reason, whatever's going on there, I don't see any reason to bet or to think that we know that prices are about to rebound. So right now, I'm not putting any new dollars in the oil patch at all. I have like one position that I haven't closed because it's a really good company and they still make money. But apart from that, I'm just waiting. I'm waiting for clear signs. I don't know where the bottom's going to be, but I want to have a pretty good idea that it's in the rearview mirror and not about to hit the windscreen. And we ain't there yet.
Okay, so basically, when you're looking at this, you see increased production from OPEC, which of course more supply, with going into what might be reduced demand if we are going into a recession, which looks almost imminent. That would drive the oil price down. So you're holding off on betting, I guess, kind of like copper, in that if we got a recession coming,
Yes.
oil's probably
Yeah.
going to get hit. So wait for cheaper prices.
And the key difference, well, 2 points. One is obviously if shit happens in the Middle East, oil could go up, but that's not a trend. That's not we can't plot a line and say this is when, Israel bombs Iran or something like that, right? If you could do that, then that would be investable, but there's no such thing. If you want to bet on that, if you want to gamble that the Middle East is about to go up in flames, well, remember that probably every year for the last 50, it has looked like this could be the year the Middle East went up in flames, and it just hasn't. So
yeah,
no sure things there, right?
yeah.
But if you want to do that, that's fine. Just understand that you are gambling. You're saying, I'm going to toss the dice, got a hunch, going to bet a bunch, and I'm okay with losing it if it doesn't work out. You can't bet the farm on something like this and then cry if you lose the farm. that having, so aside from lightning striking this year, right? Not inevitably, not imminently, but now, like, aside from that happening, then this isn't the sort of thing that you wake up in the morning and suddenly oil's doubled. Right before that happens, we'll see changes in policy, we'll see changes in demand. We would see oil would carve out a bottom, like absent, a nuclear option or something like that. We will see, the market bottom and go back up again, and then it becomes investable. At that point, it's a fundamental support, the technicals, they all agreed. Fine, then absolutely, I would be adding to my oil portfolio. But again, we ain't there yet. One more quick point: oil, like copper, essential industrial inputs, and even energy related. There's a difference though, in that we've been facing voluntary supply constraints in the oil patch, whereas we're facing structural supply constraints in copper. And there's some disagreement amongst different firms and the engineering firms and so on, looking at this, about whether this is going to be the year where the shortages start or next year. But there's no disagreement, not just Lobo from Independent Speculator and his little ragtag team of analysts, but like the biggest firms in the world that look at these things, they all project copper supply deficits starting this year or next, or some even last year, and then widening for decades to come. Like the mega mines that we need, and this isn't an EV story or an AI story. It's just simply the world population growing, and you got to have copper, Dr. Copper, right? This is going to happen anyway. And then the whole AI thing and the EV things, just sauce for the goose. That just adds to the divergence there. So this is different from oil. And if you listen to Doomberg, Steve, I don't know if you've interviewed Doomberg.
Oh, yeah.
He argues for there being basically no peak oil if you start counting other hydrocarbons as oil equivalent. That's not the case with copper. There is no copper equivalent. I mean, okay, you can substitute aluminum in some uses, some limited uses, but it's really not the same. It's not as conductive. It's more brittle. I mean, trying to do that led to a bunch of house fires in the United States in the 1970s, which is why we don't do that, right? So what I'm saying is, you could make a case that oil and copper are similarly important, similar energy minerals and so on, but they're quite different in terms of their market dynamics. And I'm not anti-oil at all. I absolutely expect, once that market looks right, to invest more there. But I'm just much more keen on copper. I'm really chomping at the bit to, this is what I'm accumulating cash for ultimately, is to build out a long-term copper long position that I think will be foundational for my wealth going forward.
Okay. All right. So whereas the copper deficit is structural, it's going to happen. With oil, it's kind of a voluntary thing, and a little bit more. Doomberg calls it the oil cartels. They're basically deciding how much they want to drill and how much they don't.
Yeah, well, it's hard for me to say where it's like it's gonna happen, right? But absent a giant copper meteor being discovered next year and being brought to Earth, yeah, this looks like as close to a sure thing as anything is in the resource sector.
Okay. Kaz wants to know, what do you think of the non-operator oil and gas business model? He's talking about royalties.
I love royalties. Sure. I mean, do your diligence. That not all stocks. But there's other non-operators. There's also the MLPs, right? The pipelines, other things. And there's often this idea, though. So the short answer is great. I love it. Come the day that I start investing in oil companies, royalties will be on the list, and maybe some of the MLPs, other companies that stand to benefit. But here's the thing: don't kid yourself that there's no downside in these things. Like I remember there was, back in my Casey research days, there was this argument for the MLPs of, well, like Enterprise or something like that. They get paid to transport the oil, whatever the price is, right? So if the price of oil goes down, it doesn't matter to them. They're still going to get paid, and that's going to protect my stock from any possible downside in the oil price. Guess what? Didn't happen. Oil price went down. The Enterprise went down. They all went down in sympathy. And I mean, you could say, oh, well, that just made it a better buy. If they're still getting paid, if they're, basically their PE went up as a result of this market error, fine. But if you bought before the market error, you're still in a world of hurt. And if you have an investment time frame that requires you to deliver results before that error is corrected and the stock comes back up again, you can book a loss, even if you end up being right 5 years later or something, right? So all I'm saying is, yes, I agree, it's great, but be careful. It will not protect you from the downside if the whole sector goes into reverse, unless you have picked wisely, as the knight said, and can endure the volatility for however long it takes.
Okay, okay. I've heard the same thing that basically like these midstream guys like I don't know, Schlumberger or something that they'll do fine regardless of the price, and you're saying you've lived that and that's not the case.
Not for the shares that I owned.
Okay. All right. And let's move on to this one I thought was an interesting question. Sam wants to know, I had a similar thing with, well, let me read his question first. How much of the valuation of Ivanhoe Mines and Ivanhoe Electric do you think is tied to Robert Friedland himself? Do you have confidence that the management teams continue when he steps down?
Double-edged sword here. Clearly, it's a lot. I mean, the Friedland name gets instant recognition. Instantly, that company, access to capital, market cap goes way ahead of whatever the valuation of the assets is. But that's not entirely wrong or wrong-headed. Like I just said, access to capital, Friedland brings a lot to it. So if you've got, say you pick up a known resource that's got challenges, or maybe it was just not something a major wanted to build, but it was too expensive for a junior to build. You bring Robert in and problem solved, right? So you can unlock that value. So I'm not trying to throw Robert under the bus or say, oh, it's all about his name and don't overpay. I mean, there is value in that name. Specifically, the second part of the question, Robert didn't acquire that name and fame by picking bad managers who screwed up the operations. So, clearly, there's a team going on here. I mean, any famous person like this, they're the spear point, right? And they have an organization behind them. When you look at people, and by the way, I won't throw Rick under the bus, but I'll tell you, because he told me, and this is, I think, an open, he has an organization behind him, and a part of their job description is to make him sound smart, right? When you ask him questions, he knows the answer. Like, it seems like he knows everything. Well, that's because, I mean, well, he's been in this for a long time, and he really does know. He does know a lot. But he has a whole organization feeding him quality information behind him. So, I'm sure that it would be unrealistic to think that Friedland could be as successful as he is without developing a quality organization behind him that can deliver results. I mean, you can fake it until you make it, but you have to make it at some point. You can't fake it forever.
Okay, all right. There is a premium there, but you have confidence that over the course of his career, he's been doing this a long time, and he isn't that successful only on his own. He's built an amazing team underneath him.
Yeah, sorry, one final point. People say bet on the jockey, not the horse. And if I were a private investor with a long time frame, I think that would absolutely work. Like if you bet on these serially successful names, the guys that or gals that do it repeatedly, some of their projects and companies will go down in flames, but most of them won't. If you've got the time and the patience, I think you could just do that and nothing else and be successful as a resource speculator. But you need to be really patient, and you need to understand that they're not Midas. Some of their projects will go up in flames. You can't say, oh, it's my favorite guy, Ross Beatty, Robert Friedland, whoever, Justra, just and bet the farm in any one play, because all of them have had failures. Even the broken slot machine, Ross Beatty, has had some failures, right? And I'm not throwing anybody on the bus here. I'm just saying, as a business plan, you need to be careful, patient, and due diligence and stock selection still matters. So the way I summarize this is, sure, bet on the jockey, but I also want to bet on the horse that I can believe in. I want to see the horse first, not just the jockey. Oh, sure, trust me, I'm going to get a horse. It's going to be great. I want to see the jockey and the horse, and it needs to look like it's not headed for the glue factory.
Okay. Let's see, we're getting close to the hour. Jurisdiction and geopolitical considerations. All right. Tika wants to know. He's basically asking, maybe we can pontificate on the new Trump regime and how he's throwing out a bunch of executive orders to try to make things easier. It looks like Arizona has come into play. Possibly, maybe the resolution mine is finally going to get built. After almost 3 decades. Kind of pontificate on what you see Trump throwing out with the executive orders here, and how that could be beneficial or not at all. What do you think?
Right. I actually think this is extremely positive. There's an unambiguous positive here. And sure, can executive orders be reversed? Probably will they be reversed? It would be no surprise to see the political pendulum swing in the other direction in the US. But, we're not even halfway into the Trump's term here. So if you've got a shovel-ready project that was waiting forever and finally you got a permit, you can probably get that puppy built by the time Trump's gone. And that's a big deal. So Biden, one of the first things he did was start undoing Trump 1 executive orders, right? So is there risk that these things will go away? Absolutely. That's not what I'm saying. I'm saying that it's happened early enough in this term that this is investable. I mean, even if Trump, if he doesn't dodge the next bullet, right? I think Vance continues. I don't see Vance suddenly coming out of the closet after Trump is gone and saying, no, I'm a completely different person. And I never believed any of that. I have a totally different agenda. Even if that were true, I think it'd be political suicide. So, his interest will be to continue Trump's legacy, his agenda, no matter what. So I think this is quite solid. I think these executive orders, okay, there's legal challenges and so on. But meanwhile, you've got your permit. You're building your mine. And once the site is already under construction, there's a lot to be said. Possession 9/10 of the law, that sort of thing. So I think again, due diligence is necessary, selection is necessary. I wouldn't buy everything and anything in the United States just because Trump 2 looks pro mining. But if you've got projects that were economic anyway, there's a feasibility study, it looks very robust, everything's there except the permit. And now we've got the permit, or that's highly material. I think that's investable. Other projects, it depends on your timeline. If you've got, I guess, just on down the food chain towards exploration, just be more and more wary. But basically, Trump has single-handedly upended the whole NIMBY culture in the United States, and that's a good thing. And even if there's a, not Biden, because he's toast, but let's say Harris comes back from the dead, right, in 4 years, and tries to reverse everything. There's a lot of jobs at stake. Like if these mines are up and running, and some of the big ones, if you got big copper mines with hundreds or thousands of employees, and it's critical minerals, and you need these for your windmills and all that stuff, right? It could be that by that time it's too late to change course. And by the way, at least for me as an investor, my usual time frame for investment is 1 or 2 years. That's well before the next presidential cycle. So, sorry, I guess I'm going on at length about this, but I think this is really interesting. I do think it's investable. I think it's an unambiguous positive, and it may set the tune for around the world. I mean, other countries, even Europe, right? They've got a fast track list of critical minerals projects that they're looking to support. This is a maybe not irreversible, but it looks like a tidal shift, and it's good for mining.
Okay, all right. So you see this as not a nothing burger. You see that this is big, and especially because it happened at the beginning of his term. It's not like he signed this thing before he's out the door in 3 months. They have time to be able to get these things built, and if they're actually able to pull that off before the end of his term, the next guy coming in that doesn't want it, it might be too late, because now they're telling this little town that all of their jobs are going to be shut down because they don't want mining anymore, and that's probably not going to happen.
And by the way, to our gold bug friends out there, it was interesting that the first executive order included, I'm sorry, it didn't include silver, but it did mention gold specifically. So some people will say, oh, yeah, well, we need copper and lithium and all this other stuff, but gold, who needs that? That's a pet rock. Well, it's in the executive order.
Okay. All right. Last question here from Derek. He says, I've stayed away from Mexico investments and focused on Peru. What are your thoughts there?
Oh, well, Peru got really scary after some political unrest that affected mining, even though it wasn't really mining related. And I have to say that it has calmed down and it hasn't been as bad as one might have feared. I can also say that Scheinbaum hasn't been as bad as I feared either. I'm not saying that either one is now totally in the free, but I think the connection between the two is that big open pit projects are going to be difficult in either one. Existing mining, probably okay. A new underground mine with a minimal footprint creates lots of jobs, probably okay. A big open pit mine that's going to turn a whole mountain into a valley or disappear, hectares of pretty countryside. That's a much bigger problem in both jurisdictions. But even more durably so in Peru. All of these big mega projects in Peru, they get protested. It's the kind of thing where you go away for a weekend and your mine camp gets burned down. That's even with government support. So I'm not saying either is uninvestable. I'm saying I personally wouldn't put money into a big open pit project or even explorer working on an open pit target, let alone a developer in either country until I start to see permits for these projects. I want to see them happening. I want to see shovels hit ground. I want to see people able to build these projects and to not be shut down 2 weeks later by a bunch of protesters sitting on the road, with cute indigenous outfits that, make it difficult to evict them. I want to see people actually be able to do this business, to advance these assets unmolested. Show me that, and I'll be willing to invest in both jurisdictions, because especially as the silver pool, it's just hard to find great silver projects that aren't, especially in Mexico or Peru.
Yeah, yeah. Okay. All right. So projects that have, been going on for a while and they're actively pulling stuff out of the ground, maybe even exploration projects that are underground and away from communities, but you're not looking to invest in big open pit exploration projects.
Or developers either, unless
Or,
you got the permit. Even if you had the permits, I remember several projects in Peru, but one in particular had a 100-kilometer road between the project and the port on the coast. And so the project got permitted, it got built, and even got military support to prevent the mine offices and the plant from being blown up or burned down every week. But you can't cordon off 100 kilometers of road or close it to the villagers. So every village across the way would throw a log on the road and put out a hand. We didn't get consulted, we didn't get compensated, and so on. And that's a really difficult social issue that, yeah, I need to see those things resolved and doing well. I need to see the companies able to do business.
okay. All righty. Awesome. Well, thank you, Lobo. I want to give a shout out to your newsletter. We'll put a link down below for me. It's a must read every week. Go ahead and tell listeners what they can expect if they sign up for your newsletter and your premium service.
Well, actually, let me go ahead and tell my audience that I regret not having given more of a heads up that we were going to do this interview in advance, because I forgot. And it's a pattern now, Steve, that you ask a lot more reader questions than I think any other interview I do. And I love reader questions, because it's one thing for you and I to talk about whatever we think is important. It's another to actually deliver value for the audience. What do they want to know about? So I really love this about your interviews. And I'm not doing that kind of Q&A for free these days, largely. So I'm happy to do this with you. And I'm happy to, next time we do one of these, to tell my audience in advance, if they've got questions, to send them in to you, and I'll do my best to take them up. I also answer questions in my free weekly letter, the Speculator's Digest, which you can find at independentspeculator.com. And then, if you like the way I think, maybe you can hire me to be your due diligence guy through my paid services.
Awesome. We will put all the links down below, including the upside maximizer, like we talked about. Lobo, thank you for coming back on the show.
Thank you, Steve. Always fun.
And thank you for tuning in. Go to stevebartonmoney.com for more and have a wonderful day.